Good morning. It is Monday, October 13th, 2025. It's just after 9:30 on the East Coast. It's semi-holiday, choose your own adventure holiday in the US. And it's Thanksgiving Day in Canada. So happy Thanksgiving to my Canadian friends. This is Robert Sin at CEO Technician on X, at Goldfinger on CO.ca, and this is Goldfinger Capital on YouTube. Before we get going, I want to just do a little bit of advertising because I think it's important. This is my Substack, Goldfinger Capital. See, robertson.substack.com. If it doesn't say Goldfinger Capital, it's not me. Okay. And I invite you, if you watch these videos, please subscribe to the Substack so you get my emails in your inbox as soon as I send them out. I'm not going to spam you with any garbage. I don't do 10 articles a day. I do one a day at max. Sometimes one every 2 days, right? So it's not going to be overwhelming. And just look at some of the content in recent weeks. You can see talking a lot about the US government taking all these equity positions in critical minerals companies, my thoughts on Newmont, what might happen there with Barrick. Lots of good YouTube content, and I sort of unpack some of those interviews with CEOs, and then, covering companies that I follow closely, like Hercules Metals, Talon Metals, Ridgeline Minerals, et cetera, right? So it's all there, and you can just do the free version, or you can pay $10 a month and go get the full Monty, including my unadulterated thoughts and analysis on different junior miners, including some timely macro and trading calls, right? And that's $120 a year. Or you can actually pay for the full year. It's $100. So it's not a huge investment, and you get really all my best content for that price. So, little advertisement to start. And I'm grateful. I'm grateful for all the subscribers, the free subscribers, the paid subscribers, even the people that won't put their email in and just won't press the like button on YouTube and just watch my stuff. I'm grateful for you too. Grateful for everybody, or the people who don't even care about me or don't even know I exist. Grateful for them too. So let's get going. A lot to get to today. Committed to keeping these at 30 minutes or less. A lot going on. I mean, gold is 4,100. Silver's above 50. Perpetua is up 8%. Idaho Strategic's up 10%. Talon on the OTC is up 10% this morning. This is some crazy moves, guys. So, as much as I love it, and I love that everybody wants to own what I have owned for the last 3 years, including holding some bags during the last 3 years, it's a little scary when suddenly the stampede of elephants is trying to get through the 6x4 door frame. Holy cow. This is wild, right? Why is gold 4,100? What is going on with silver? What's going on in London? The London metals exchanges cannot keep an orderly market in silver right now. Evidently, they don't have the supply. It's wild. This is stuff. So I want to make a point here. Yeah, I'm a veteran, 23, 24 years, whatever. I lived through 2008, traded through 2008, traded through the silver move to 49.85 in April 2011, traded the subprime crash in 20. I've seen a lot, but I've never been here before. We've never been here before. So even if you're a 40-year veteran or a 4-month veteran, we're all kind of in the same place here. I've never seen $4,100 gold. I've never seen silver trading with these bid-ask spreads, and some dealers are not buying anymore right now. They're not buying any scrap silver or non-0.999 pure silver. And there's a rush for the 1,000-ounce bars, right? So like the The 1,000-ounce bars are the A plus form of investment grade silver, and there's a squeeze for those. There's just not enough of them, it seems. And so there's planes full of silver pallets going to London from the US. I mean, this is stuff we've never seen before. So I don't have some grand prognostication on what gold and silver are going to do here. I see both markets. The gold market is still an orderly ascent. Silver is a little wild right now. I don't have a prediction on silver, but it sure looks like 50 is being broken, and this is an all-time high. We are in all-time high territory in silver, right? But it does seem like a very dangerous market. I don't know what's going on in India. I'm hearing physical silver in India is trading at almost $60 an ounce. So, there's an arbitrage, because, in the US, if I'm a big buyer, I could buy physical here for 51, 52, but how do I get it to India, right? And then, it's just, there's some weird dislocations going on right now, but we are at $4,100 gold, ladies and gentlemen. This is a first ever in history. And I start with this Ray Dalio point. We are contemplating something worse than a recession. Actually, we have something that is much more profound to worry about. We have a breaking down of the monetary order. And so, what does that mean? It sounds pretty dire, but basically, since the end of World War II, and really, you could probably say actually since the early 70s, when the US went off the gold standard and started really running up big debts and deficits, we've been on the US dollar monetary order globally. The dollar is the reserve currency. It has been the reserve currency for decades, and it's only become more entrenched in that role, quite frankly, in recent years. Now, things are changing. China, and you could say, even broader, the BRICS countries are challenging the U.S., hegemony in terms of being the global monetary and economic and military power, right? And so change is afoot, right? And change can be very uncomfortable. It can be challenging, quite frankly. And so we have change afoot. And what we're seeing in gold and silver is honestly a byproduct, a symptom of the breaking down of the monetary order. It really is that simple. And so, really, we could talk a lot about market dynamics and who the buyers are and what exactly is happening in gold and silver here. But I really think the driving points are the Dalio quote. The market is sniffing out a breaking down of the monetary order. Okay. And then meanwhile, by the way, the US government is shut down, right? Right now. The Treasury Secretary is out on the airwaves this morning, saying that we're starting to see the economic effects of the government shutdown. Of course we are. And it's only going to get worse the more this drags out. And meanwhile, look at some of this employment data trends, right? So this is ADP. Look at that trend since the end of 2024. I'm not political. I know people, it's a fake data. Well, just stop, okay? It's not fake data. There's a lot of confirmation that the U.S. employment market is deteriorating. It's softening. Look at the JOLTS hiring rate. It's basically on the lows. I mean, this is at April, May 2020 lows. This is crazy. And then income dropping off. So, remember the administration has been one of, it's time for Main Street to win. Well, Wall Street was just at an all-time high last Wednesday. I know we had Friday, okay, big shakeout on Friday, but still, we're not far off of all-time highs. A lot of money has been made in financial markets in 2025 by the rich. And honestly, the middle class and poor are suffering more than ever before. I mean, this is pretty pronounced downward momentum in employment in the US. And I believe the Fed definitely sees this now. They're no longer asleep at the switch like they were 3 months ago. And, we're going to get 3, 4 more rate cuts in the next 3 to 4 meetings. Okay. I think that's pretty much a lock at this point. And meanwhile, they have cover to cut because energy is weak and they can just focus on labor. Like, we have to get ahead of the softening in the labor market. But meanwhile, look at all the inflation data. Depending upon what you look at, the CPI inflation is between 2.8 and 3%. So the Fed is nowhere near target still, and the easing has only just begun. And when we talk about $52 silver and $4,100 gold, think about that. The easing has only just begun. We're in like the first inning of it. And we're already at $50 silver and $4,100 gold. Can you imagine? This is not going to be just like 4 or 5 months of easing. This is going to be 12 plus months of easing, and we're just at the beginning of it. And I believe this easing cycle from the Fed won't end or won't pause until we get QE, full blown QE, not the stealth, um, fake version of QE that the Treasury does by stuffing all the issuance at the front end to the banks, and they can just rehypothecate that like it's cash, deposits, and still expand the money supply, right? And that's a whole nother conversation we won't get into, but that's a fake QE, that's a stealth version of QE that's been going on for the last couple of years, right? And even with that, look at the labor market, right? The economy is softening, and look at the Zillow chart. I know I just chose this chart because this is such a pronounced downtrend over the last month, and this was a stock that was a market darling in September. Real estate is hurting. Real estate is hurting. New home sales, pending home sales, all that data is very, very soft. What is going on in Argentina? The Treasury bought 20 billion of Argentine pesos. What's happening in Venezuela, right? So this is another dynamic. I don't think this is a urgent, pressing news or situation for the stock market or even for the gold market. But this is something to pay attention to because very clearly this administration has its sights set on increasing U.S. influence across Latin America and maybe some regime change. And that's a whole nother topic, but that's another sort of destabilizing dynamic out there. And then what is going on with the Pentagon and critical minerals and all these investments? Last week, it was Trilogy, TMQ. Okay, this is in Alaska, copper, cobalt, a few other metals. Of course, there's usually always some gold and silver byproduct if it's porphyry deposits. But wow, this is about copper, and this is about making sure the U.S. is self-reliant for its own copper supply. Okay, but still, they're not addressing the smelting and minerals processing angle. That's still not been settled, not even close, right? So, and by the way, even with this mine, let's say it gets all the green lights and it's going ahead, they have to build a 200-mile road, and then they have to build the mine. So even at like a World War II all hands on deck sort of operation, you're talking minimum 24 months. And if it's not that sort of operation, warp speed, you're talking 5 to 6 years. Minimum. A 200-mile road in the middle of the wilderness. Not a small feat, right? But now there's a story out on the FT saying that the Pentagon is going out and securing minerals like cobalt and antimony globally. They're going to some commodity traders like Glencore probably, and they're placing big orders. So I heard this morning $500 million of cobalt. The Pentagon is buying $500 million of cobalt. So there is the situation with China, and that's a whole nother topic. Whatever happened Thursday, Friday last week shows how much China has the US checkmated in terms of rare earths and key metals for the military industry, right? Like the missiles, the fighter jets, the tanks, even the bullets don't get manufactured without all of these metals, including rare earths, including copper, including antimony, including tungsten, including cobalt, and many obscure metals that you've never heard of, right? And China has this whole industry completely dominated, right? They've been building this out for 30 years, while the US has said, okay, you do that over there. We don't want the environmental downside of all that industry, right? Because it's messy and it's not environmentally friendly, really. So we exported it to China gladly. Well, now the world has changed and things aren't so simple anymore, right? And we've got nothing. We have 2 copper smelters in the US, no nickel smelters, no rare earths, refining and processing. I could go on, but the US, the cupboard is bare, really is the right way to say it. So to go from the cupboard is bare to we're self-reliant and we've secured our raw materials supply chain is a minimum 10-year process, even if you have the power and finances of the federal government. It doesn't happen that fast, folks. We don't have the people even. We don't have the expertise. Minimum 10 years, right? So anybody who's talking 2 or 3 years or this is going to be done by 2028, you've got no idea what you're talking about. You got no idea. You got no idea. With the COVID vaccines, our pharma industry is huge. We have some of the best pharmaceutical companies with the best IP and greatest minds in the world. We do not have that in mining and minerals and rare earths processing, right? So this is a rush, and this is that whiskey bottle into the shot glass moment. Perpetua, Idaho Strategic. I'm not going to talk about the valuation of IDR, but I just recommend that you check it out and look at the company's financial statements, what their revenue and income is, and then look at the market cap. I suggest you do that for a lot of these because these are no longer cheap companies at all. I could still make an argument that Talon could still be cheap here. I can look you in the straight face, look you in the eye, and make an argument that Talon could still 2x from here, maybe more, but I can't do that at this point with IDR and Perpetua. But you cannot short a stock on valuation. I would never consider it, especially with this momentum and how unloved this sector has been for the last decade. These stocks can still go higher. I just want to tell you, valuation, yeah, starting to get a little frothy, folks. I don't even know what to say about Trump and Xi, but I don't think that's over by any stretch. Of course, Trump was going to walk it back after what happened. Because the U.S. and China cannot have a trade war. If trade freezes between the U.S. and China, it's a depression worse than the 1930s. So, it's 2 people, in an elevator. The elevator's stuck, and one of them has a hand grenade. Both going to die, or are we both going to live? It's that kind of situation, right? Not good. And what happened on and by the way, gold and silver have been rising in recent weeks with a rising dollar, right? That should send off some alarm bells in your brain. Now, what happened on Friday is we had this really complacent market at all-time highs. Everybody's leveraged up to their eyeballs with ODTE long calls on Thursday morning. And then these rare earth headlines start to drop from China. And then Trump does what he does Friday morning and shoots off the hip and fires one back at China saying, get ready for 100+% tariffs. You made a big mistake, right? And meanwhile, look at the global flows to equities. I mean, inflows have been thick. And as of Wednesday afternoon, S&P was at an all-time high, right? VIX was pretty damn low. The complacency was really high, and SPOOs were on the high. So Friday was a nasty, violent breakdown because suddenly people are panicking, right? We go from complacency to fear in 2 hours, right? And so you get a big down day, down 3% on the S&P from open to the after hours low. Pretty brutal. And then Bitcoin drops like 15%, right? Because that's a leveraged expression of the S&P. And so all the people who say Bitcoin is like an alternative asset, you've got leveraged SPOOs, basically. Like that's what Bitcoin is. You got leveraged QQQ or SPY. Oil stocks got hammered. And even after walking it back on Sunday, this is an unconvincing bounce. The market is spooked here that this situation with China is only going to get worse. Okay. And okay, bonds are closed today, so we won't look at that. But 4.05% on the 10-year. Obviously, there was a flight to treasuries on Friday. Yeah, so let's move to gold miners. So we're going to get Newmont earnings at the end of next week, next Thursday. That's going to be a big one. If you want coverage on that, if you want me dissecting it for you, subscribe to my Substack. You'll get all of that on my Substack. I'll be all over those Newmont earnings. And then, honestly, Newmont's at a whatever 85, 90 billion market cap. That's pretty high. I'm not necessarily loving the long Newmont here, but I am loving long Barrick. And I've explained this also on my Substack, why I like Barrick so much here. It has a lot to do with 4 Mile. It has a lot to do with the fact that there's been a change at the helm. And now there's some opportunities for M&A. And Barrick has been divesting non-core assets. It's been cleaning up its portfolio, streamlining its balance sheet and operations. And the chart technicals, this is a beautiful bull flag. I love this setup here. And then Barrick will report earnings in early November. So I like this setup here. I like it long Barrick here. And then when it breaks out eventually from this bull flag, we're going to probably see new 52-week or multi-year highs. And I could actually see Barrick trading up to 40 by Thanksgiving in the U.S. So about 6 to 7 weeks from now. Okay. Oh, Cameco's up 8%. Damn it. I was trying to get this video out earlier so you guys could buy Cameco, but this is a great setup. I love this consolidation it's been having for the last several weeks. This is one of those 90 to par trade setups where I could see Cameco going to 100 by November 1st. Par is $100 a share. And there's a trade setup a lot of older traders know about is when a stock gets to 90 on the NYSE, does a consolidation for a few weeks, you got the par trade. It's gonna trade to par. I'm not going to talk about valuation or EPS or PE here. Just whiskey bottle into the shot glass. Cameco to 100 over the next 2 to 3 weeks. Here's Trilogy. A lot of insiders selling here, by the way, since this came out. A lot of insiders with big profits on their options. I don't blame them. Good for you. Take the money. You've earned it. And, how many times are you part of a company with deep in the money options when the U.S. government takes a stake and green lights your 211-mile road through the wilderness? Not often. It's like winning the lottery. Take the money. Again, you heard my comments about, I love Perpetual. I love Stimna. I love the project. Love the company. I'm just valuation. We're getting up there, guys. Definitely not a short, but just be a little careful here. IDR, you heard my comments on that. This is a rare earth play at this point. It's a gold miner with cash flow and net income from its gold mining operations, but they're small gold mining operations. But this is a rare earth mania play, and shorts are just getting blown out of the water on this one. And by the way, I've been all over IDR in my Substack. Look back at previous articles. I was talking about it 6 months ago. And then Talon Metals. So Canada's closed today. So you got to look at the OTC trading in the US. But this is a beautiful chart breakout, ascending triangle breakout on the weekly, accelerating volume. Love it when the fundamentals and technicals are in alignment. I am super long Talon here and very bullish on the outlook for this company and for nickel, cobalt, platinum, palladium, gold, and silver in the US. And then Hercules Metals. So they also had news out last week, drill program update. I covered that on the Substack. This one has pulled back a little bit in the last couple of weeks. And the question is why? I don't have a perfect answer. But I view this as an opportunity. I think some people are fretting about drill results, or maybe they're going to miss at Southern Flats. I see this as an opportunity. And I've also laid out in my subscriber videos the valuation foundation for the company and why I see this as an opportunity at 70 cents a share with a potential for a new discovery to be made at Southern Flats. And yeah, I need to make more videos on rare earths and the infrastructure involved. But we are at the beginning of a mania, guys. Tungsten. People who didn't know what tungsten was 1 month ago are buying tungsten stocks on the CSE in Canada. That's a mania, guys. They don't know what they're buying. They got no idea what they're doing. And just know that this is fun right now, and there's probably more upside for another couple weeks or another month or whatever. But eventually, most of these things are going to end in tears for people who don't know what they're owning, what they're buying. And so that's why you should subscribe to my Substack. And if you're not sure about a junior or a obscure tungsten stock, shoot me a DM, shoot me an email, ask me a question. Happy to weigh in for my YouTube subscribers and Substack subs as well. So enjoy it. Everybody wants what I own. Thanks for tuning in. Again, if you like this video, please hit the like and subscribe button there on YouTube, and have a powerful trading week.